Hi guys, hope you're doing amazing. This is Nimit, your costing professor, and it's just 15 days approximately now to the exams. I'm hoping that all of you are studying really well, preparing really hard. Um, why am I on this video right now? What am I going to get for you guys in this video? What I've realized with my experience of teaching over 100 batches is there are some places where people make mistakes. Now, those mistakes that people do uh, is not because they are underprepared or they don't have an understanding of the question, but it is just the pressure in the paper which makes you do those mistakes. And those are what you usually call as the silly mistakes. That is what is the major disappointment for any candidate, and for that matter even the examiner. So you'll have to understand this. Your examiner is not your enemy, but you'll have to give the examiner instances and places where the examiner can award you marks, right? And how will that happen? How will that happen? It will happen only and only when you stop making silly mistakes in the questions. Okay. Now, when I mean by silly mistakes, I mean those mistakes which could have been avoided very easily. And such mistakes, when they appear in the paper, it really puts a doubt in the examiner's mind whether you understand the basic concepts of certain aspects or not. So, today's agenda in this video is to actually cover that. The lesser silly mistakes you make, the more confident is your examiner to actually award you marks. You'll have to understand this. The examiner might want to pass you, but you'll have to give them opportunities to pass you, right? And how would these opportunities pop up? By not making these stupid errors. Okay. So in this section of the video, we are going to cover up all the chapters where, with my experience, I have realized students make basic mistakes. So I'm going to help you cover that. Secondly, what I'm also going to do is, you already have a textbook. I'm going to mark a few questions which I think are good enough for you to see them one day before exam. So you exactly know how or what kind of questions that you should be doing a day before exam. These questions are inclusive questions. They have everything in it. They have a lot of things that will cover up the silly mistakes portion that we're talking about, and it'll help you boost up that confidence during the paper. Okay. For this video, all you have to do is to have a small writing pad with you. I will anyway share the file that I will be writing in the video, but I would still suggest that you have a small writing pad with you where you can put down the heading as mistakes not to be made. Okay. So I want you to do that and keep writing so that one day before exam, 30 minutes before your exam, an hour before your exam, that is the only list of things that you should be looking at so that you don't make those silly mistakes in the paper. Okay. So I'm going to start off with material. Okay, it's the first chapter of the practical section. It is what is again a very very basic chapter. So, but there are some mistakes that I want you to take care of. What are those? So, material as a chapter is spread across EOQ, which has with discounts and without discounts. It has stock levels, and it has the miscellaneous category. So the chapter is largely divided into three of these sections. Now, when it comes to EOQ, of course, you know the formula. It is root of 2 into annual demand into ordering cost per order upon carrying cost per unit per annum. Okay, so that's the formula. Now, things that you need to keep in mind: your demand always has to be annual. Okay, your demand has to be annual, plus your demand has to be of finished raw material. See, many a times what they do is they'll give you the demand of the finished goods and you would just use that. But you'll have to understand one thing: EOQ is about how many units to order. And when they say how many units to order, they mean the raw materials. Okay. So when you're talking about raw materials, you'll have to make sure that whatever demand that you have been given in the question, is it of the raw material or is it of the finished goods? Very, very basic but important concept. The demand has to be annual and it has to be of the raw material. Okay. The next thing that you will have to take care of is the ordering cost has to be per order basis always and always. You cannot skip that, you cannot dodge that. Okay. And the carrying cost, as we always say, it is pupa, the poo into the pa. Okay. Now, the poo is basically cost per unit, and the pa will be given to you in a percentage. You multiply these two is when you get pupa. Okay. Now, there may be instances where you have more than one ordering cost. Okay. There may be instances where you have more than one ordering cost. Add them together to get your ordering cost per order. Then there may be instances where you have more than one carrying cost as well. So if you have more than one carrying cost, then add them all together and then get the carrying cost percentage. Okay. So let's say we have a question where it says the interest rate is 2%, obsolescence rate is 6%, storage is 10%. So when you have something like this, add all the three percentages and then multiply it with the cost per unit to get your CC Pupa. Okay. So these are the things that you'll have to keep in mind when it comes to the EOQ portion. Now, always and always, you'll also have to check for whether the question has given you discounts or not. Please remember, EOQ does not work when you have discounts. If you have discount, you cannot use the EOQ model. You will have to use the trial and error model, which I'll be talking about in some time. But as far as the demand go, EOQ without discount goes, these are the three things to be kept in mind. The demand has to be of the raw material and it has to be annual. The ordering cost has to be per order and the carrying cost has to be pupa. So these are the three things that you'll have to look into when you solve a basic EOQ question. Okay. Now, when it comes to with discount, you have two types of questions over here. You have one where you will fall under the category of those trial and error method. So you'll do a trial and error. And the second type of question, what you have is where you make a comparison statement. Now, this comparison statement, how is this to be prepared? We used to find out the EOQ first, and then we'll find the total variable cost at EOQ, where we'll record the EOQ, we'll find out total ordering cost, total carrying cost, and material purchase cost. And then over here, you'll find the total variable cost at whatever is the proposed terms. Now, in the proposed terms, you will record order size. Please keep this one more thing in mind. If you are following the formula, getting the answer with the formula, only then you call it as EOQ. Otherwise, you do not call it as EOQ. You call the same thing, the exact same thing as order size. And all of the formulas where you have EOQ, you will replace it with order size. So everything that is about EOQ will get replaced with order size. Okay. So you'll find your total ordering cost, total carrying cost, and material purchase cost again. Okay, material purchase cost again. So here, wherever is the total variable cost lesser is what you will do. If the total variable cost is lesser at EOQ, you will accept EOQ. If the total variable cost is lesser at the proposed terms, you will accept the proposed terms. Okay, so these are the two types of statement. For this trial and error, I will show you the question in a while. You will recollect it from that. We had made multiple columns, and in those multiple columns, we had actually solved at different levels. Okay, so we'll come to that with the question itself. Okay, with the EOQ discount, the second one, comparison statement, things to be kept in mind: total ordering cost and total carrying cost will be the same at EOQ. because that is the basis of EOQ, correct? So that is always and always going to be the same. But total ordering cost and total carrying cost at proposed terms will never be the same. Please keep this in mind. The total ordering cost and total carrying cost is same only and only at EOQ. Any other level, it is not going to be the same. Okay, so keep that in mind. How do you show this to the examiner? You will write total ordering cost, but when it comes to total carrying cost, you will say total carrying cost is equal to total ordering cost at EOQ, full stop. You will write this. This is telling the examiner that you understand that this is important. You know that the very basic that at EOQ, the total ordering cost and total carrying cost is one and the same. So you will keep this in mind. You will not solve both together. At EOQ, you will not find total ordering cost and total carrying cost both using the formula. You can choose to find any one of it. That's all. You, if you like to calculate total carrying cost, then do that. Do not calculate total ordering cost. If you like to calculate total ordering cost, then do that and do not calculate total carrying cost. Okay, but don't solve both of them. Okay, so that these are the things that you'll have to keep in mind when it comes to the EOQ section of the chapter. Now, there are a list of few questions that I would want you to mark. These questions are fairly inclusive, where you will be able to revise majority of the concepts in very little time. So in our book, I would want you to come to question number 4. I think this is a good question for you to solve. That is one. Then this is question number 6, which is the RST limited question. Yeah, this question is where we do the trial and error method. I'll just quickly remind you what are the trial and error method. We are again trying to find the total variable cost, okay, which is basically total ordering cost, total carrying cost, and the material purchase cost. Okay. Now, what is your formula for total ordering cost? It is annual demand upon the order size. Since it is not EOQ, we are writing order size. So annual demand upon order size into ordering cost per order. Okay. Now, how much is the annual demand over here? Whatever would be the annual demand, you would find the order size and then multiply with OCP. But we will put this in stages. We will first put down the order size as a column. Okay. The next column that we'll find is number of orders. So how would you get number of orders? Only by doing annual demand upon order size. And then you will find out the total ordering cost. The total ordering cost is basically number of orders into ordering cost per order. Okay. The second thing that we'll find out is the total carrying cost. For the total carrying cost, what is your formula? It is average inventory into carrying cost per unit per annum. Okay. Now, as far as average inventory goes, how do you get average inventory? It is half of order size. So we'll find one column for average inventory and we'll find one column for CC Pupa. Now, why do we need a separate column for CC Pupa, sir? Because the poo will keep on changing. The per unit keeps on changing. Although the percentage is 25%, but the poo keeps on changing. So since the poo is changing, the pupa will also change. So we'll find one column as CC pupa. Okay. And then we'll get our total carrying cost. That is average inventory into CC pupa. And then finally, we'll calculate the total material cost as well. The total material cost is a fairly simple number. That is your total quantity to be purchased into the material price. Okay, material price. Now, when you say this total quantity has to be your annual demand. Okay, because the total ordering cost that you calculate is annual, the total carrying cost you calculate is also annual, and both of these, since these are annual, the material purchase cost also has to be annual. So you'll have to make sure all the three are annual before you put down the number. So the when you put down the materials purchase cost, it has to be the annual demand, not the order size, not what you're going to order. You cannot have only that many units of material price. You will have to have the material price of the entire quantity that you're buying, which is basically your annual demand, for the sole reason because your ordering cost is annual, your carrying cost is also annual, which is why your material purchase cost also has to be annual. Are we understanding? Now, from this rest of this question 7, 8, 9, you can choose to do any one. Okay, anyone. I leave it up to you. Whatever question you like, you can choose that. But that's the only question that you should be doing. All the three questions are similar actually. So one day before exam, choose to do any one of the question. And question number 10. This is a very interesting question. I'm sure you remember also. This question I want you to do one day before exam. Okay, so again, quick recap of whatever is to be understood. Demand has to be annual. The ordering cost has to be per order. Carrying cost has to be PU and PA both. If you have more than one ordering cost and carrying cost, then add them all together to get it. Then, when it came to the discount terms, you have two types of question with discount with the the trial and error type, which we've just seen, and the comparison statement question. In the comparison statement, you will make the total variable cost at UQ and the total variable cost at the proposed terms. And at the total variable cost at UQ, you'll find total ordering cost, carrying cost, and the purchase cost. The total ordering cost and the total carrying cost is one and the same at UQ. Do not make that mistake of calculating it twice. The total variable cost at the proposed terms, you will have total ordering cost, total carrying cost, and the material purchase cost. But this time, the total ordering cost and total carrying cost will not be the same. See, please be careful about that. And one more thing. Sorry, I forgot my mistake. One more thing. When you are calculating your total carrying cost at the proposed terms, when you're calculating your total carrying cost, you'll have to keep this one thing in mind. Your PU has changed. Since the poo has changed, let's say it was 20 rupees and now there is a 10% discount. So there is a discount of 2 rupees. Now your poo is 18 rupees, and on that you will multiply the carrying cost percentage. So if the carrying cost percentage is 20%, hypothetically, it will be 20% of not 20, but 20% of the discounted price per unit. Keep that in mind. No mistakes to be done over here. So this is what you will be doing for your proposed terms carrying cost. Are we understanding? This is what all you have in the EOQ section. Now, coming up to stock levels questions. Okay. First and foremost, I have seen a lot of people making this one mistake. They confuse minimum stock level to minimum consumption, maximum stock level to maximum consumption, and average stock level to average consumption. This is one mistake that I have seen a lot of people making. Please, 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 guys, please try and understand. Stock levels and consumptions are not the same. The consumption is basically what you use to find your stock level. Do not get confused over there at all. Okay, there are two types of formulas that you have. You have the blue formulas and the pink formulas. When to use the blue formulas? Always. When to use the pink formulas? When the question mentions safety stock. Unless and until the question does not mention safety stock, please, please, please do not proceed further. Okay, do not use the ping formula. You will be using the ping formula only and only when you have the safety stock mentioned in the question. Other times, all the other times, you will be using the blue formula only. You will never and ever be using the ping formula. You will always and always be using the blue formula only. Okay, so that's one thing to be kept in mind. Secondly, very important is that your lead times and consumption has to be in the same time frame. If let's say the lead time is in weeks, the consumption also should be weeks. If the lead time is in days, the consumption should also be in days. And if the lead time is in months, the consumption also should be in months. So whenever you come across a question which has any stock level asked, before you solve the question, before you start solving the question, applying the formula, check once whether the lead times and the consumptions are in the same time frame or not. That's a very important thing to be kept in mind before you actually start solving. But sir, what if it is not in the same time frame? What do we do then? The question will actually give you a method. The question will actually give you a way to find out how to make them on a common ground. To how to put them on a common ground, the question will definitely tell you some detail. You can't really guess like that. So which is why the question will always and always give you some indication, some methodology as to how this will happen. Okay, so keep that in mind, that you will have some way of converting the lead times or the consumptions and making them on a common ground. You will always have that. But unless and until they're not on the same ground, please do not proceed to solve the question. Okay. Now, as far as questions from stock levels go, I think one of it, this is a good question. Okay. Question number 13. 14th is a question that you should try. And yeah, I mean, you can do the 18th question. The last part is interesting, and the 19th question. Those are the only questions that you should be practicing one day before exam. Question number 20th is fairly simple, which is why I wouldn't recommend it to you. Now, few things more about the stock levels. First and foremost, um, they may again confuse you with the annual demand of raw material and finished goods. Okay, so the annual demand, is it of the raw material or is it of finished goods? Okay, you need the annual demand of raw material. If you get it for the finished goods, it is a raw. Okay. Now, what if you do not have any annual demand mentioned for the raw material, and they have only given you for the finished goods? In that situation, we have a question for that. In that situation, what do? You do the average consumption into the time frame. For example, the average consumption is 500 kgs per week. So you will multiply this by 52 weeks. Let's say it is 500 kgs a day. Then you will multiply with 360 or 365 days. Or let's say it is 500 kgs a month. So you will multiply it with 12 months. You get the drill. So we have this one question where they haven't told us any annual demand for the raw material. They have only and only given out the annual demand for finished goods. Now whenever they give you such, you will always and always first find out what is the average consumption and then multiply it with the respective time frame. Now that time frame could be days, weeks, or months, or whatever. Okay, so on that basis you will find out the annual demand. Okay, so that's what you will have to keep in mind when it comes to stock levels. Okay, now the miscellaneous category is one of my personal favorite. From this particular chapter, I think if you get anything out of the first few topics, that is EOQ and stock levels, if you get something out of that, I am sure you will be able to crack that open. Okay, there's nothing much that you should be doing over there, but in the miscellaneous category, this category of the chapter, I think, is very good and important. If I want to set up something interesting from this topic, I would set up something from this section. Okay, so apart from 22 and 23, which are fairly small, I think you should be trying out all the questions one day before exam. So that makes it around 6, 7 odd questions from this section and around 5, 6 questions. So you'll be able to do around 10, 12 questions for this chapter. Okay, and don't worry if you are just right now thinking that, oh my god, how am I going to do 12 questions for a particular chapter? I will give you the methodology to that as well. I'll By the end of this video, I'll tell you how do you scan these questions really fast and make sure that you've put in everything without putting in a lot of time. I'll give you that trick as well. But yeah, that's all from the material chapter that you should actually be looking at, because that's all you'll be requiring. Okay, now I'll take a short break and I'll start with the next chapter, which is labor. Okay. So now the next chapter that we are doing is labor, or also called as employee cost, which is the one after material. So as far as labor or employee cost goes, the chapter is largely divided into Halsey and Rowan as your incentive schemes. Then you have the rate of pay. You have idle time and overtime. Then you have labor turnover and loss of profit. So these are exactly the number of topics that you have, or the subsections that you have for the topic. For me, the most important one is Halcyon rule. I consider this to be very interesting, and also I consider the loss of profit questions to be interesting. So now, what are the common mistakes that you have over here? So as I said, while teaching also, that this chapter is more towards mathematics than towards anything else. So which is why you will have to be extremely careful when it comes to applying basic simple mathematics. Now when it comes to Halsey and Rowan, what you have majorly is the time allowed, time taken, time saved, and rate per hour. Out of these three elements, that's time allowed, time taken, and time saved, you need to have at least two. So now, which two would you have? You could have any of the two. You could have time allowed, time taken. You could have time allowed, time saved. You could have time taken, time saved. You could have any of these. But you will have to have at least two before you could actually start solving anything. Now, what exactly is time allowed? For whatever is the actual output, whatever is the actual output, the time that should have been taken. The time that should have been taken is time allowed. The time taken is whatever is the actual time taken, and then the time saved is uh, the difference between the time allowed and time taken. So you have these three types of times. Time allowed, time taken, very important. Time allowed is whatever you have produced, whatever is the actual output. For that particular actual output, how much should be the time that should have been taken is your time allowed. The time taken is whatever you have actually taken, and the time saved is the difference between the two. Now, you have a lot of basic questions over here. One important element that you have is effective hourly rate. The effective hourly rate. Now, the effective hourly rate as a calculation is largely the earnings upon time taken. Okay, this is your major formula for effective hourly rate. Now, I've always been specifying this whenever the question mentions EHR. For earnings, you will not write earnings as earnings, you'll write earnings as EHR into time taken. This is what you will have to specify. Your earnings are not earnings, your earnings are EHR into time taken. Okay, so this is one very important element that you will have to figure out. Whenever the question has anything mentioned about effective hourly rate, you will not write earnings as earnings, you will be writing earnings as EHR into time taken. Many times the institute will also confuse you with the questions, saying that your earnings, or rather they'll ask for hourly rate of earnings, hourly rate of earnings, and they'll also give you guaranteed wage rate. They'll also give you guaranteed wage rate. So now, what exactly happened? You've been asked the hourly rate of earnings, and you have been given the guaranteed wage rate as well. Now, in such a situation, when you come across such a situation, you may get confused. What exactly is hourly rate of earnings? So please understand, the hourly rate of earnings is basically your EHR. See, whatever whatever is guaranteed wage rate, that is one thing. If you have the guaranteed wage rate, then everything else is EHR. Okay, keep this in mind. If you have the guaranteed wage rate, then everything else is EHR. You will have to keep that in mind. And how do you get EHR? EHR is earnings upon time taken. How do you get EHR? Earnings upon time taken. And if at all they have mentioned anything about EHR in the question, then you will not write earnings as earnings. You will write earnings as EHR into time taken. Okay, so keep that in mind. If EHR is mentioned, then earnings will be EHR into time taken. Okay. Now the next segment is the rate of pay segment. Now, as far as the rate of pay goes, always keep this in mind. Whatever is the total outflow that will be happening from your end, you meaning what? The employer end. Okay. Whatever is the total outflow happening from the employer's end, that you will have to divide by the net effective hours. You will have to divide it by the net effective hours by the hours. Now, what do you mean by net effective hours? The working hours. How many ever hours the worker is actually working for you, that is what you'll have to divide it by. So the total outflow, whatever you may pay basic earnings, DNS allowance, employers contribution to PF, ESI, etc. You may give them bonus, gratuity, all of those payments, that whatever has gone out of the employer's pocket will be the numerator, and divided by the net number of hours the worker is working. The worker may work, let's say he was supposed to work for 300 days, but he actually worked for only 280 days. You will divide that by 280 days and get your answer, something like that. So always keep this in mind. Whatever are the total outflows, divide by the net number of hours the worker has been working upon. Okay, this is what is your calculation for rate of pay. Okay, very simple basic questions. I am expecting an MCQ grade question to be coming out from over here. I see this coming as an MCQ. So, uh, something on those lines is what I am expecting over here, because this does not really require 5 marks to be asked. I think in a 2 marker question, this MCQ can fit in well. Okay, so that is the second part. Idle time and overtime, we have specific questions. I'm going to mark you as important. Those are the questions which you have to see one day before exam. There are some set of rules that you'll have to take care of, and then comes in the labor turnover. Now, as far as labor turnover goes, labor turnover uh, is going to be rate of change in which the rate of change in the workforce, or the employee workforce, or whatever. So in this labor turnover, you have three methods. You have the replacement, the separation, and the flux method. Okay. Now under the replacement method, who all will come? The number of workers who have been replaced. Under the separation method, who all will come? That the number of workers who have been separated. And under flux method, who all will come? They are the ones who are replaced plus separated plus newly recruited. Now, who are these newly recruited workers? These newly recruited workers are the ones who have joined the organization in accordance to some expansion. See, there were 100 workers, 20 of them have left. Whoever has left for whatever reason, or you kick them out, all of them are separated. Okay, whether they go out of their own will, or you leave them, you quit them out, you fire them, all of them will be separated. Who all will be replaced? Who all will be replaced? The ones who have come in replacement of the ones who are separated. But the workers who have come without the replacement, as in the ones who have not come in as a replacement, they have come in as a new position, that those workers are the newly recruited workers. Okay, so you have all these three categories of workers: the replaced, separated, and newly recruited. And you will put them as in replace plus or separated, or replace plus separated or newly recruited upon average number of employees on roll into 100. How would you get average number of employees? Opening plus closing divided by 2. Okay, that into 100. Okay, now what are the things that you will have to keep in mind when they say recruited and joined? When they say recruited and joined, so the replaced is also recruited and joined, and the newly recruited is also recruited and joined. So both of these will form part of recruited and joined. Keep that in mind. Recruited and joined is replaced plus newly recruited. Both of them put together. Okay, this is the only thing that you have to keep in mind. There's nothing much in this. This segment is a lottery segment for you. If this appears in a paper, free marks, bonus marks coming your way. Okay. Now, as far as the list of important questions go, I would mark a few questions as important for you. Uh, I would want you to try question number 6 before the exam. Uh, After that, I want you to try the 10th question. Then, you can do the 13th question. It's an all-inclusive question. There's a lot in it. Then you can do the 17th one. The 18th one, very nice question. 20th, no, 21 you can do nothing from, you can do 24. 27 is one question I wanted to try. 28 and 29 as important. Um, 36, 37, and 38. Now, again, I have marked so many questions. How will we finish this, sir, one day before exam? So you'll have to understand, one day before your exam, you don't have to really keep solving the question. What you actually do is glance through the question, read the question, prepare your answer in your mind, and then keep looking at the numbers. Calculate a few important numbers, see whether you've got them right or not. That's how you revise. See, revision is what you're doing. You are seeing them again. That does not mean you are doing them again. Okay, there's a huge difference. And trust me, when you come back from your third paper that evening, the next day morning, and the next day evening, so that's 1.5 days of time. That is enough time for you to do approximately 100 questions. Okay, even if you're doing it with a decent speed, you can do 100 questions. Even if you're a little slow, okay, even if you're a little slow, you will be able to do around 70-80 questions for sure. So now, with those many number of questions that you have, we'll be able to finish up the entire syllabus. I think the first two chapters we have marked around 25 odd questions. We have around 75 questions for the rest of the chapter, which I think is more than sufficient, because a lot of chapters do not have a lot of questions that you will have to practice. Okay, so that's what you have from this segment of the chapter. Few things to be kept in mind: quick revision, time allowed, time taken, time saved. These are three important elements for your Halcyon Rowan. Time allowed is whatever has been your actual output for that much output, how much time you should have taken is your time allowed. Be very, very careful with that. Time taken, the question will be telling you some way or the other. Time saved, you'll find them naturally, and the rate per hour. That is the only thing that you have to keep in mind. And of course, the EHR calculations. When they say, when they if they have given you EHR, then earnings will not be earnings. Earnings will be EHR into time taken, is what you have to keep in mind. And the second part, if at all they ask you hourly rate of earnings, and they have given you guaranteed wage rate. So guaranteed wage rate, if they have given anything else that they are asking is EHR. That's the things that you have to keep in mind. I will see you in the next topic. Okay, guys, the next chapter that we are starting is cost sheet. Now, as you may know, cost sheet as a chapter is a fairly format driven chapter. You all already have done sums on it. Few things that I actually want you to keep in mind when you're doing cost sheet as a chapter. Point number one, the old and the new format. Now, when to be used what, and when will we use the old format, when will you use the new format? So if you are doing a purely practical topic, okay, and a cost sheet topic, okay. When I say practical topic, meaning all the questions where you've been asked only and only a cost sheet question. In that situation, you will be solving as per the new format. Then, sir, why did we study the old format? You studied the old format for cost accounting system. Okay, that chapter is still not updated by ICA, which is why we have to follow the old cost sheet format over there. We have the reconciliation type 2 questions. The reconciliation type 2 questions are the ones where you will have to use the old cost sheet format to actually get your marks. But apart from that, wherever, whenever, whatever comes in, you will have to make sure that you are using the new format of the cost sheet only. The Parks cost sheet is what you have to look into. Now, what has off late happened is Institute has been asking a lot of items where uh, they have things asked under each type of overhead. They have various items of direct expenses and all of that, and you may get confused as to which item will fall in which category. That's a common problem that is coming up, but the solution is equally simpler. I will show you. Um, 1 second. You have a topic in the module. Only thing that you have to do is open up your module and come to the cost sheet chapter. Now, the moment you come to the cost sheet chapter, this is your chapter, okay, you'll come across this just below the cost sheet. They have explained us what all will form part of direct material, for example. So they have said they will have cost of material, freight, insurance, trade discount, duties and taxes. Very, very important. Duties and taxes only if credit is not available. If credit is available, then nothing doing. Okay. Then under employee costs, you have wages, allowances, bonuses, overtimes, etc., etc. All of these. I want you to buy heart them. Yes, you heard me right. I want you to buy heart them, because if there will be any item which will come, which we have not done. Okay, we have done fair amounts of cost sheet. If at all there comes in an item which is not covered over here, it will be from this list. Especially, I want you to pay very good attention to direct expenses and factory overheads. These are the two portions where you will have to pay best attention, because this is the major concern of confusion. You will not find any other item to be fit in that difficult, but these items, these two, are very confusing. You may make a mistake over here. Okay, so these are two items which I want you to pay good attention to. There are others as well, but others are fairly simple. Okay, like admin overhead, selling overhead, all of these distribution overheads, these are fairly simple. You don't have to worry much about those, but you might have to worry a little about the factory expenses, the factory overheads, and direct expenses. Those are two areas where people commonly make a mistake. So what I wanted to do is by heart all of these. And as far as the list of important question goes, I will give you that. 1 second. So for me, the questions that I find important, not the first, not the second, not the third. I think you should be doing the fifth one once. Question number five, question number six, seven is simple. Eight is a good question. Eight is good. Nine is good. For under the new format, I would want you to try out question number 12. This is a good one. You can do 13, 12, and 13. And out of 14, 15, 16, these three questions, just do the 16th question. Sole reason because 16th includes 14 and 15. They are both there. Since they're both of them are there, you won't find a lot of trouble. If you know 16th, you'll definitely know 14 and 15 all by yourself as well. So these are the questions, important things to be kept in mind. Just the classification of items. You will make sure that whatever is in the module is what you're studying properly. When you come to the old and the new format, old format only for cost accounting systems. For everything else, you'll follow the new format. The parks format is what you have to follow. And that's it. I mean, that's all that you'll have to keep in mind for this particular topic. Okay. Okay, guys, the next chapter that we are going to revise is cost accounting system. Now, I know all of you hate that chapter. It's a chapter that you want to leave out an option, but I'll try my best to finish its revision in the least possible time. Least possible time. So, what we'll do is for the cost accounting system, we have the non integrated, the reconciliation, and the integrated portion. And under reconciliation, you have three types: type 1, type 2, and type 3. Correct. Now, for the non integrated question, what do? We will create the flow of the cost sheet in terms of accounts. So, the first account is stores, second is wages, third is factory overheads, fourth WIP, fifth admin, sixth is finished goods, seventh is selling and distribution, eighth is cost of sales, nine is costing P&L, and the 10th one is GLA. These are the list of accounts that you have to make. 10 accounts to be done over here. Okay. Now, when you're drawing up these 10 accounts, make sure that you are making them in the same flow because the accounts close in that particular flow. Okay. So we will make sure that you have to have the same flow of accounts as well. Now, what all do we have to do over here? The question will give you a list of journal entries. All you have to do is post and then close. Okay. And for that, my best recommendation to you, wait, is go through the formula book. This formula book has all of the journal entries that you have. We will quickly revise all of them. The first is material purchase. The material purchase will be stores to GLA. Material returned will be GLA to stores. Then you have material issued to production. Your production account is your WIP account. Production account is WIP account. Anything that is related to production goes to WIP. The journal entry will be WIP to stores. After that, you have material issued return. You have two types of return. One is purchase return, which is GLA to stores. The other is issued return. The issue return is stores to WIP. Okay. Then you have material issued to all the other types of accounts. Okay. You may have material issued to factory repairs, administration office, sales office. No, whoever you are issuing the account to, whoever you are issuing that material, debit them. So if you are issuing to factory overheads, then factory account, then issue to factory overheads or admin overheads or selling and distribution overheads, issue to any of them, and then credit the GLA account. Okay, sorry, it's credit the stores account. So the entry would be factory, admin, selling and distribution, any of one of them, to stores. And then you have two types of deficiencies. Deficiencies may be normal or abnormal. If there is a normal deficiency, if there is a normal deficiency, you will have to do uh, factory overheads to stores. If you have abnormal deficiency, it'll go to costing P&L to stores. Okay, these are the amounts, the journal entries that you will have. You will have nothing more than that. Next up is the wages related entries. So for your wages related entries, you have wages incurred. The incurred entry would be wages to bank, wages to GLA, sorry, and then you have two entries. You have the direct wages and the indirect wages. Direct wages will go to the production account, so the entry would be WIP to wages. Indirect wages would go to your factory overhead account, so the entry would be factory overhead to wages. And the wages account will always and always tally. It will never ever, never ever, never ever have a balance. Okay. Then comes in the factory overhead related entries. So factory overheads, or for that matter, any overheads will have only two types of entries. You have the factory overhead incurred and the factory overhead charged. The factory overhead incurred will be FOH to GLA. The factory overhead charged will be factory overheads will be charged to its next account. The next account is basically WIP. All overheads are charged to the next account, which is why maintaining the flow is very, very important. All overheads will be charged to its next account. The account next to factory overheads is WIP, so the entry will be WIP to factory overheads. Okay. Then you have WIP related entries. In the WIP account, you will have only one and one only entry, which is actually the confusing one. It gets confused with another entry which will come soon. But this entry is known by the name of factory overheads at cost, finished goods at cost, cost of finished goods transferred to warehouse, cost of goods completed, net factory cost. All of these would be your um names. The entry would be finished goods. These are basically those goods which are finished, and now you haven't sold them. You haven't sold them, don't get me wrong. You haven't sold them yet, you have just completed them. So these will be transferred to finished goods account, and the account to be credited is WIP. So the entry would be finished goods to WIP. Then comes in the admin overhead account. Again, the same two entries: admin overhead incurred and admin overhead charged. Admin overhead incurred would be admin to GLA. Admin overhead charged, admin will be charged to its next account, which is finished goods. So finished goods to admin overhead will be the journal entry. And then comes in the finished goods entry. Finished goods entry is the one which gets confused with WIP entry. Okay, so be very careful over here. But good thing is this entry has only two names. It can be called by the name of finished goods sold or COGS. These are the only two names that you have over here. So the entry would be COS to FG account. So the goods are these are the goods which are sold. So they are transferred to cost of sales account. Okay. Now the next two entries are for selling and distribution. Selling and distribution account will have the same two entries: selling and distribution incurred and selling and distribution charge. So you have the exact two entries over there. And what will be the journal entry? Incurred would be SND to GLA. Charge, it will be charged to its next account, which is COS to SND. Okay. Then COS related entries, you have only one. You will, whatever is the balance, whatever is the question situation, all of the COS balance will be transferred to costing P&L. So the entry would be costing P&L to COS. And then you have sales and sales returned at cost. Sales entry, very simple. It will be GLA account debit, that is for the debtors, and the sales will go to costing P&L. So the entry will be GLA to costing P&L, and then the sales returned at cost. Now this entry is a reversal entry of which one? So if you see, these goods are before it being sold, they were transferred back to the warehouse. Since they were transferred back to the warehouse, the finished goods stock increased, and the COS has reduced because this is where they originally transferred it to. Okay. Now that's all you have to keep in mind for your um, non-integrated portion. Also, every account will have some mandatory entries before you can close them up. So for your material or stores account, you should have the opening balance, the GLA purchased, the WIP whatever you have issued, and the closing. You need to have out of these four things, any three things for you to close the account. You cannot have more than one missing figure. If you have more than one missing figure, you cannot close that account. Please keep that in mind. For your wages account, no problem at all. This automatically tallies. Factory overhead should have two mandatory entries. It should have the incurred entry, that is the GLA portion, and it should have the charged entry, which is the WIP portion. Okay, see, these are the two entries you should have. Now, for example, if you have both of them, then you will have by balance carried forward or to balance carried forward. You can have either of the balance. Okay, you can have a debit balance, you can have a credit balance, you can have either of the balance over here, but you will have those. Okay, now, when it comes to WIP, you have six mandatory entries over here. You'll have opening balance, you'll have from entry from stores, from wages, from WIP. Then on the credit side, you will have um, by finished goods and by closing. Out of these six things, if you have one missing, only then you can close this account. Otherwise, you will not be able to. Then comes in after WIP the admin overhead. Same thing for admin overhead. You will have the admin overhead incurred and the admin overhead charged. Where does admin overhead get charged? To its next account, which is factory overhead. Okay, so that finished goods. That is the next account that you have. You will be charging it over there. And for the finished goods account, you'll have four entities mandatory. What are those four? You should have opening balance. You should have one entry from WIP. You should have one entry going to COS, and then you should have your closing balance. Okay. If you have these four entries, then yes, this is what you'll be able to close. But you should have at least three of them again. From the finished goods, you jump down to selling and distribution, same stuff here. All the three overheads account will have the same set of entries. You'll have the GLA for the incurred and you'll have the charged entry. Now, what is the account after S&D? It is COS. So S&D will be charged to COS, admin will be charged to finished goods, FOH will be charged to WIP. Are we understanding? Then the costing P&L account, it does not have any mandatory entries, neither does the COS. For the COS, you will transfer everything that you have in the COS account back to costing P&L. And again, the GLA will also not have any mandatory entries. Okay, so these are all that you have. Okay, so this is what you'll have to keep in mind when it comes to non-integrated accounting. Okay. For the reconciliation, you have the three types. The type one, both the differences are given, both the profits are given. So they have given you profits as per the cost books, profit as per the financial books. They have given you both. And they've also given you the differences in these two profits. All you have to do is either plus or minus. Okay. Now, keep this one thing very, very important in mind. With this, you can solve anything. Okay. This is my cost book. This is my financial book. I am starting cost book as the base. Okay, my base is the cost book. So whatever modifications, whatever plus and minus that you're going to do is from the cost book's angle. Okay, the cost book angle will tell you whether there is a plus or a minus. Okay, so that. Now, all you have to see is where is the profit higher. Let's say because of some expense, because of let's say preliminary expense or goodwill written off, the profit of the financial books has lowered. So what do? You lower it, the cost books profit as well. Okay. Let's say because of depreciation overcharged in the cost books. You've written more depreciation in the cost books. What has happened? Since you wrote more depreciation, that is more cost in the cost books, the profit has reduced. So what will you have to do? You'll have to add back. Okay, so you'll add in that situation. So whatever modifications that you're going to do has to be in the cost books and nowhere else. Okay, the financial books profit may increase or decrease, but you have to match your cost books to that profit. Are we understanding? So the all modifications to be done only and only in the cost book. Okay. Secondly, let's take more example. Let's say opening stock is overvalued in the cost books. Okay. Now, opening stock being overvalued. Firstly, try and understand when you draw opening stock is to be written on the debit side. All of the debit side items will have a tendency of reducing the profit. All of the credit side items will have the tendency of increasing the profit. Okay. So if you have written more costs on the debit side, what will happen to the cost books profit? It will reduce. Since there is more cost, it will reduce. So what do you have to do? You just have to add them back. Okay. Now, there may be some credit items which are in the financial books, let's say bank interest or dividend or something like that, which because of which the profit of the financial books increased. Profit of the financial books increase. So what do you do with the cost books? You just add them up. So that's all that you have to keep in mind, that what is happening to the profit and which book's profit has increased or decreased. If the financial book's profit is high, add up the cost book's profit. If the financial book's profit is lesser, reduce the cost book's profit. If the profit of the cost books is lesser, add them up. And if the profit of the financial cost books is higher, then reduce it down. Okay, so basically it's a matching concept. All that you have to figure out is when you're doing this, it should end up at a clap. If the financial books profit is higher, you take up the cost books profit and clap. Okay, so you have to make sure that you have to clap, and you can't clap like this or something like that. Please don't do that nonsense. Okay, so only thing that you have to figure out is make a clap. Okay, this will take care of your type 1. In your type 2, reconciliation is where finally your amount of your efforts that you've put in to know the old cost sheet format will come into place. You will have to, they will give you a financial P&L. You will have to draw a cost sheet and then do the reconciliation. Now, one of the common problems that I feel people come across when they're doing this is to figure out whether there is under absorption or over absorption. This is one common problem. Now, understand. Uh, in the cost sheet, what you write is the absorbed figure. In the financial books, what you write is the incurred figure. And this is always and always the case. Okay. In the cost sheet, you write the absorbed figure. In the financial books, you like the incurred figure. Okay. Now, if you have absorbed more, incurred less, what have you done? Over absorbed. If you have absorbed less, incurred more, under absorbed. See, it's simple. I'll give you numbers. Let's say you absorbed 50,000 rupees in the cost sheet, but in the financial books, you've written 70,000. So you absorbed 50, but you incurred 70. Okay. So now, what is this? This is a case of under absorption. But reverse situation. You absorb 80,000 and you spend 60,000. So you absorb 80,000, you incur 60,000. What is this over here? You have absorbed more and incurred less. When you absorb more and incur less, this is the case of over absorption. Are we understanding? Absorb more, incur less is a case of over absorption. So these are your two cases of under and over absorption. Now, what is the treatment for it? So I'm going to give you a quick hack because we are now nearing exams. This is the time when you should know all of these hacks. If there is under absorption, then minus. If there is over absorption, then plus. Okay, under absorption is minus, over absorption is plus. Okay, but this is, keep this in mind. This is considering cost books as base. This is considering the cost books as a base, under absorption as minus, over absorption as plus. Okay, but only thing is to spot it correctly. What is under absorption and what is over absorption? Very simple, but people sometimes fumble over here. Okay, so keep that in mind. What do you if the incurred is more, absorbed is less, so under absorbed. If the incurred is less, absorbed is more, so over absorption. Keep that in mind. Okay. Now, this is what is in type 2. For type 3, my honest suggestion would be to just see one question. Okay. All the questions are the same. Just see one of it and you will be done. You will be sorted with the rest of the three questions because of the other three questions are exactly same. No change at all. So just see one question. Now, coming on to the last segment is integrated. Okay. Now, when it comes to integrated accounting, only thing that you have to do is replace GLA to the respective account. Replace GLA to the respective account. So whatever is your respective account, write that. It could be bank, debtors, creditors, share capital, this, that, etc., etc. All of those accounts, and replace it with GLA. Okay, that's the only difference between non-integrated and integrated. So if you know non-integrated, you automatically know integrated accounting. So there's absolutely no difference over there. Okay, so this is what you have. Keep that in mind. But if you want to leave this chapter, see, I'm not going to mark you any important over here. But if you want to leave this chapter, if I had to leave this chapter, this is how I will leave it. What I'll do is I'll know the journal entries for integrated and non-integrated both. I will do the reconciliation part one and type one and type two correctly, and type three I will just look at one question and go. This is how I would leave the chapter. I won't solve anything, but I won't leave anything technically. If you see, that will take up much lesser time. You could actually just go back, rewind. This video is what, 19 minutes right now, 20 minutes into its number. So within 20 minutes, you can revise the entire chapter. Just see the type 3 question once, and you are done. Okay, so if you're thinking of leaving this chapter, instead of leaving this completely, think of doing something like this. I'm sure it will be way easier and better. Okay, so that's it from my end from cost accounting system. Now it's time to look at another chapter. Okay, so the next topic that we're starting is joint products and byproducts. Um, in my opinion, this chapter does not hold a lot of importance when it comes to paper because the marking scheme is such. But that being said, it's a simple topic here. I mean, there's nothing much that is difficult over here, and you can simply just you know uh, go through the set of formulas, and that is what you will be done with. So here we have the joint products and byproducts. Firstly, what are joint products? The products which emerge from a single simultaneous products emerging out of a single process, those are joint products. All costs up to the joint split off point are called joint costs. All costs beyond the split off point are the further processing cost. So in terms of cost, you will have only and only two types of costs over here. You have joint cost and you have further processing cost. In some questions, you may have selling costs as well, but these are primarily the two costs that you have: joint cost and further processing cost. Now, you'll have to understand that further processing costs are specific for each and every product. So there is no requirement of any change over there. Okay, you don't or rather change, you don't distribute, you don't have to distribute the cost over there. But when it comes to the joint costs, these are common costs. This is one cost for a variety of products. Okay, so since the cost is for more than one product, you do not really know the cost is for which particular product. So which is where we divide the joint costs on some suitable basis. Now, uh, you'll have to understand all costs up to the split off point are joint costs. They may be material costs, processing costs, all of those costs, all of them are joint costs. And after the split off point, all costs will be further processing costs. Okay. Now you have four methods of JC allocation, and you have a second type of question which is depth of processing. Okay, now when it comes to JC allocation methods, the first one is the physical measure. There, in that, you take up the quantities and you divide the joint cost on the basis of quantities. So let's say A, B, C, D all got 50, 50, 50, 50 kgs. Then you will divide it in 50 kgs to 50 kgs to 50 kgs to 50 kg ratio. Okay, then sale value at split of whatever is your selling price at split off into the number of units at split off. Please keep this in mind. When you say sales value at split off, it means the amount, total amount, not the selling price. So you will not be dividing it in the ratio of selling price, you will be dividing it in the ratio of sales value. How do you get sales value? It is selling price at split off into number of units at split off. Okay, I'm repeating it again. Selling price at split off into number of units at split off is what will get you your sales value at split off. And whatever is the sales value at split off, you will use that to divide the joint cost. Okay, so that is sales value at split off. The third one is an important one. NRV. It is sales at final stage. Sales at final stage. What do you mean by final stage? It is after further processing, whatever number of units you get after further processing. See, many a times the question may have losses also. Let's say you had 1,20,000 units at split off, you lost one sixth of them, and you got only 1 lakh units at the end. So now the sales at final stage is only of 1 lakh units into the selling price. That will be sales at final stage less the further processing cost. So sales at final stage less the further processing cost will get you your net realizable value. And on that net realizable value basis is what you will have to uh, divide the costs. Okay. Now, uh, if this is done, once you get your net realizable value, you will use that to divide the joint cost. Now, many a times the product is not further processed. Okay. If the product is not further processed, then see, try and understand the sales at split off will become its final stage. Okay. If a product is not further processed, the sales at split off is its final stage. So you'll put down sales at split off less the further processing cost, which will be nil. You will have zero further processing costs over there. Why? Because you don't have any further processing cost. So you'll only put down sales at split off less further processing cost, which will be nil. Okay, and then you will divide the joint cost on that basis. And then comes in the final method, which is constant gross margin method. Now, this one is a simple one, but it requires two steps to be done. First, step number one, we'll find the gross margin. Okay. Now, in step number one, when we are finding the gross margin, what do? We take up the sales at final stage for all the products put together. The sales at final stage for all the products put together, less the further processing costs and less the joint cost. Now, when you're writing the further processing costs, these are all the further processing costs of all the products put together and all the joint costs. So basically, this method, in this step, you will be putting down everything on totality basis. Sales at final stage on totality basis for all the products put together, less the further processing cost of all the products put together, less the joint cost of all the products put together, you will get something called as your gross margin. Now, you will find this gross margin as a percentage. So, gross margin upon the total sales will be your percentage. Okay. Then comes the allocation part. So you take up a product, you put down individual products. Now, individual products, you put down sales at final stage less the gross margin. So sales minus the margin, sales minus margin means sales minus profit is basically cost. And now that cost is split across two, joint cost and further processing cost. So you have the further processing cost already known. So the balance portion will become the joint cost. So I'll show you over here. You have the total cost. Now, in this total cost, you can have further processing cost and therefore the balance will be joint cost. Okay, it's as simple as that. So again, a quick recap. In step number one, total sales at final stage for all the products. less the further processing cost, less the joint cost, you will get your gross margin, and then that gross margin as a percentage of sales is what you will have to figure out. Okay, gross margin as a percentage of sales is what you'll have to figure out. Then second step, you have the individual sales at final stage less the gross margin. You will get your total cost, and that total cost will be split between the joint cost and the further processing cost. Okay, so that is your entire step for constant gross margin NRV. Now, in terms of question, you may be asked depth of processing. Now, depth of processing is asked in many fancy ways and different ways in the question. Sometimes they may ask, is it feasible to do this or not? Would you prefer doing this or not? Something like that. But identifying them is simple, because if a question is not asking you JC allocation, then the question is asking you for depth of processing. Now, you have two ways of figuring out depth of processing. What you can do is, first, you can find out profit before and after further processing. So, if you're finding out profit before further processing, you will have sales at split off, because before further processing, that is the stage at which you will sell the product. So, you'll have sales at split off less less the joint cost. Okay, you won't have any further processing cost because you haven't further processed the product. So you'll have sales at split off less the joint cost. Okay. Second part of profit after further processing. What will you do? You will put down sales at final stage, because now you're further processing the product. So you'll have sales at final stage less the further processing cost less the joint cost, and that will get you your profit after further processing. Okay. Wherever the profit is higher is what you will be doing. If the profit is higher at split off, sell at split off. If the profit is higher after further processing, then sell after further processing. Okay. The second way of doing this is where you are comparing the you are comparing the NRV with the sale value at split off. If the NRV is higher, you will get you will further process the product. If the NRV is not higher, if sale value at split off is higher, then you will sell the product at split off. Now, why? I will show you over here itself. See, no matter what happens, the joint cost that you write is going to be the same. Okay. But whether you further process, do not further process, but in both the situations, the joint cost remains the same. So if you notice over here, what are you left with? You are left with sale that split off. And over here, what are you left with? Sales at final stage less the further processing cost. Sales at final stage minus the further processing cost is basically NRV. Sales at final stage minus the further processing cost is NRV. So you will have sales at split off versus the NRV. That's all. So you don't have to do this entire step. You can choose to do only the NRV calculations as well. Okay, you can do that. There is nothing wrong with it. It's a shorter way. But if at all you do not have sales that split off an NRV, and if you have been calculating profits, then do profit before and after for the processing. But if in a question you already have sales that split off an NRV, then just compare the sales that split off an NRV, see where it is higher. If sales that split off is higher, then accept, do not further process. And if the sales after further processing is higher, or NRV is higher, you will choose further processing. Okay, so I'll just quickly repeat the entire stage. You can find out profit before and after further processing. If you find out profit before further processing, you will have sales that split off less the further processing joint cost. If you find profit after further processing, that will be sales at final stage less joint cost less further processing cost. Okay, now wherever the profit is higher, that is what you will be doing. Okay, wherever the profit is higher, that is what you will be doing. Second way of doing it is comparing sales value at split off and NRV. If the sale value at split off is higher, then sell before further processing. If NRV is higher, then sell after further processing. That is the only thing that you have to keep in mind. Why? Because this profit before and after processing, as we just saw, turns up to only sales at split off versus NRV comparison. So that is what we do. When to choose which method? You can choose any method anytime. But if at all you already have sales at split of an NRV, for example, then do the comparison and then do it. But if you have profits already calculated in any other part of the question, then compare the profits and then do it. Okay, it's as simple as that. Now, one last section that remains. One second now. Okay, the only segment that remains in this particular topic is byproducts. We have only two questions on byproducts. Always keep this in mind. There is only one method for our byproducts. It is called net realizable value for byproducts. Okay, so don't get confused with the name. Whatever name they tell you, you have to do only one method. Now, what is that one method that you'll have to do? So you will first find out for the byproducts what is the joint cost that they can absorb. Okay, so you'll take up sales at whatever the selling price, reduce their profit. You'll be left with cost. Reduce all the costs that you already know, the further processing costs, selling costs, all of that. You'll be left with some amount of joint cost. Whatever the joint costs the byproducts can absorb, let them absorb. The balance will be absorbed by the main product. So you will first find out how much joint cost can be absorbed by the byproducts. The balance joint cost will be absorbed by the main product. Okay, so that is what you will have to keep it in mind when you're doing the byproducts. Now, uh, very simple chapter, but in terms of revision, very good. I'll tell you why. Because you can practice very few questions and get a hold of all of it. I want you to practice question number one, then question number four, um, you can do question number eight, 10, 11 for sure. This is a very good inclusive question, as almost everything. Um, and one 14. That's all. Do these 4 5 questions before the see them before the exam. You'll have an idea of the entire chapter pretty much well. And that is it from this particular chapter. I'll see you in the next one. Okay, so the next topic that we are starting is activity based costing. Now, ABC, as you know, is a very important topic, and as far as the marks goes, it has been a sure question in the paper, always and always there. Uh, Never missed an attempt. Very, very good consistency in the paper, approximately 100%. In fact, 100%. They have not been consistent with the marks. So most of the times they've asked 10 marks, but there have been one or two exams where they've asked for 4 and 6 marks as well. So that has also happened. But apart from that, the chapter is fairly good and simple and manageable. Now, for this chapter, the do's and don'ts that I want you to keep in mind is our table. See, we've made that table. That table is very good for everything that you can think of. So you will have activity, you will have activity cost pool, cost driver, cost driver rate, and sorry, cost driver volume, and lastly, the cost driver rate. Now, when it comes to the table, see, what is the least difficulty that you'll have? They have already given you the cost driver rate. So all you have to do is multiply the cost drivers with the cost driver rate and you'll get the cost. Okay. That is the least difficult. Now, an average difficulty would be where they would ask you to calculate the cost driver rate. See, keep this one thing in mind. Unless and until you don't have the cost driver rate, you cannot proceed with the question. So you will have to make sure that you have the cost driver rate in the question. If you have it, great. If you don't, you'll have to calculate. That's the thing. Um, one additional level of difficulty where the cost driver volume will also not be given. You will have to find out. So, for example, they'll tell you that there are three products A, B, and C. The hours per unit are 2, 3, and 4, and the number of units are 2000, 3000, and 4000. Okay, and now you will have to first find out the total hours. So over here, the total hours are 4000, over here they are 9000, and over here they are 16,000. So 16 and 9 are 25 plus 4, 29,000 hours. This becomes your cost driver volume. Okay, so this is one additional step that you'll have to do. This is more common than the first step where they give you the cost driver rate. Okay, if they give you the cost driver rate, great, it's a lottery for you. But if they don't, this is what they'll have to give, and this is what you'll have to find. You'll have to find the cost driver volume based on this. Okay, they'll give you individual cost drivers for each of the product. You just have to keep multiplying and find out the cost driver volume. Now, this is what you'll go over here, and then the individual will be, let's say the cost driver rate comes down to 3 rupees. So 4000 into 3 for A, 9000 into 3 for B, 16,000 into 3 for C. That's what you have to do. Okay, so that is the second level of difficulty. The third level of difficulty, which I feel is the max difficulty at your level, is the finding the activity cost pool as well. We have one question for that where they have given us five departments, but they have given us only four cost drivers. Five departments, but only four cost drivers. What you'll have to do over here is you will have to first dissolve that fifth cost which is not which does not have a cost driver, and dissolve it and put it in the other four costs. You will distribute that fifth cost in the other four costs, so you'll get the activity cost pool. Then you'll have to find the cost driver volume, and then you'll have to find the cost driver rate. As far as the chapter goes, I would personally say that the entire chapter is important. I would not want to skip a question, but one day before your exam, what you can do is, one second, let me just quickly pull out the question bank. One day before your exam, I would not want you to do question number one, two, three. You can start from, let's say, question number four. From question number four onwards, I think all the questions are good enough for you to try. Please spend time during this chapter, because this will be there in your paper no matter what happens. Okay, it has been since 2018, never missed an attempt. I don't see any reason why it would miss an attempt now, or for that matter, why it would miss your attempt. So for me, this chapter becomes very, very important. As far as the question goes, you will have to be a little calm while solving, because there are a lot of multiplications to be done, but they're boring multiplications. They're not, oh wow, so great type, or what's so different about these multiplications. There's nothing like that, but you'll have to be a little patient while solving this. When you're multiplying, please make sure that you're multiplying the right numbers. So the right combination. So for example, I have this one question right now in front of me. You are going to have 4000 units, and kgs are 4. So 4000 into 4, 3000 into 3, 6, sorry, and 1600 into 3. These are the uh, kgs that you will have to put across. Okay, so that is what you'll have to find out, and then you'll get the cost driver volume. When you multiply all of the three and add them, this will become your cost driver volume. Okay, so that is what is going to be your uh, kgs. Okay, so keep that in mind. That much is more than sufficient for you to understand the entire topic. But my personal suggestion: do not skip any question from this, except the first three, four questions, because those are really, really basic. So you can choose to skip those three, four questions. But uh, see, honestly speaking, you have only 12 questions there. Out of those 12 questions, I don't think you should be missing out on any of it. You are not doing four questions, so that's just eight questions. Eight questions should not take you more than 1.5, 2 hours to revise completely. So I think you should rather be devoting this much of time at least for this chapter. Okay. So that's it for this particular topic. Let me start another one and then come back.